I want to take just a few moments and welcome everybody to our unemployment insurance webinar. Of course, these are brought to you by the Idaho Department of Labor. My name is Clint Wren, and I'm a workforce consultant in employer services in the Pocatello, Idaho office. So basically, I cover, from like Shelley all the way down to the Utah border. For any of the employers that are on the call today, I definitely welcome you to the call. And then I also welcome you, if you haven't been to the Idaho Department of Labor website in a while, it is www.labor.idaho.gov. There's some great resources out there from employers like yourself, lots of great self-service tools. And then, of course, if you do have, additional questions or need more assistance, you're more than welcome to reach out to any of your local offices to make sure that we get those questions answered for you. One of those services is part of some of those employer services that we put on are these webinars. The webinar will be coming today. We talking about unemployment insurance benefits. And I do have, two guests with me today, really two of my favorite people, that work here at the Department of Labor. They're both unemployment insurance support analysts. And I do have Louie Downey and Justin Pinter with us today. So I'll go ahead and turn the time over to them and we'll go ahead and get this started. Thanks again.
Thank you.
Thank you. We just met that guy 5 minutes ago, so
they're great people.
Okay. Hey, we really appreciate you guys all coming to unemployment insurance, this unemployment insurance workshop. Louie and I have both been working for the department for quite some time. We probably have, well, we do have over 50 years between us in unemployment insurance. Yep.
Yes.
So what we're going to do today is we're going to cover unemployment insurance. Hopefully by the end of this, you guys will understand what it is, how it works, why we call you with the questions we call you, and how to protect your accounts. We want to make sure that you guys at the end of this call know how the unemployment insurance process works and how you guys can keep yourself from paying any more than you have to for unemployment insurance. We are going to take questions, but we'd appreciate it if you would hold them until the presentation's over. This should take about, we're thinking about an hour for the presentation to go through, and once it's done, we're going to have a half an hour for question and answer. If you could, please make them generic questions about unemployment insurance. If you have specific questions about specific cases or issues or something like that, please just hang on to that, write it down, keep your question, but we're going to give you our names and numbers and contact information at the end of the presentation so that you can ask us the specific questions just one-on-one. So that is the plan for today, and we're looking forward to, we've been looking forward to a while to do this presentation so that we're helping you guys understand how unemployment insurance works. So let's move on. So there's 4 topics that we're going to cover today. We're going to cover an unemployment insurance overview. We're going to cover chargeability and liability, which is probably what you guys really care about, separation issues, and fraud. So what is unemployment insurance? Unemployment insurance came in during the Federal Social Security Act of 1935. Remember 1935, we're in the throes of the Great Depression. The government got together to try and figure out a way how to not have that happen again. So one of the things they come up with is unemployment insurance. Now, you have to understand, unemployment insurance is really, it's not designed to help the individual, though it does. What it's really designed to do is to blunt or stop a recession. Okay, so for example, when a business closes down, you'll have that business, all those people lose their jobs. And then the people who supplied that business, they're now struggling. They might lose their jobs. Restaurants around that area are now losing their jobs. People can't pay their mortgages. There's a run on the banks. And that's how depressions happen, right? Once all those steps go through, it can turn into a depression. And that's what this is here to stop. If you guys remember the recession of 2008, 2009, everybody was out of work. Then again, with COVID, everybody's out of work. So unemployment insurance works like this. Every quarter, you guys report who worked for you, and you pay taxes on each of those people. All that money goes into a fund, and that fund is used to pay out benefits when benefits are due to people, right? So unemployment insurance, you really want to look at it like car insurance, right? It's the same type of principle. right? If you have a car and you drive for 10 years, and during that 10 years, you have no accidents, no speeding tickets, no issues, no problems whatsoever, your insurance is going to go down. Now, if you have a car and in 10 years, you have a speeding ticket every year and you've gotten to multiple fender benders, that insurance is going to go up. Unemployment insurance works the exact same way, right? So what we do is when you submit that report, where you pay taxes, there's a ledger that's kept on every single business. One side, how much has been paid in on your behalf, and the other side is how much has been paid out on your behalf. So the more people you have filing unemployment insurance claims and collecting benefits, the higher your rate is going to go. The less people, the lower your rate is going to go. So that's basically the overview of how the fund works. So let's talk a little bit about, so like I said, what we're going to talk about here, the overview, then we're going to go into chargeability and liability, separation issues. I'm going to turn over to Louie, and then fraud is going to be covered by Louie as well. And like I said, at the end, there's going to be a question and answer section. Please put your questions in the chat or the question and answer section, and we're going to take those in order afterwards. Okay, so to establish eligibility, there's two parts to this for a claimant. So a claimant goes in, files a claim for unemployment insurance. There's two parts. They have to be monetarily eligible and personally eligible to collect benefits. If they're missing one, they are not eligible to collect unemployment insurance. So they have to meet both these criteria. So monetary eligibility is based on wages the claimant earned during the base period. So now we're going to go to the base period. I'm going to explain that to you a little bit. So this is the base period. This is the time frame we're looking at right now. If a claimant filed their claim for unemployment insurance today, this is what we would show. We would show the second quarter of 2023 through the first quarter of 2024. So April of 2023 through March of 2024. Now you'll notice that we're now in August, right? So why are we looking at such an early time frame? Now the reason for that is that the last quarter, which was the April through June quarter, you guys didn't have to report that until the end of July, right? So if somebody had filed a claim during July, we would not have that information. That's why we always take the first 4 of the last 5 completed quarters for a claim filed. So as you can see in this case, this claimant has worked for 3 different companies: K&K Holdings Company, Lure Construction, and Veteran Staffing Services, LLC. This claimant is eligible for $312 a week and 10 weeks. I'm going to explain to you how that works. So what we do is we take the highest quarter, which in this case is K&K Holding Company, $8,117.36. We divide that number by 26. Now we use the number 26 because most people get paid every 2 weeks. Not everybody, but most people get paid every 2 weeks. So there's usually 26 pay periods in a year. That's where that number comes from. I do know some people are paid monthly and some people are paid weekly, but that's the standard. So we use that. If you divide $8,117.36 by 26, you come out with $312. So that's where we get that number. We actually get, it's like $312.20, something like that. But we always round down on that. So that's $312. Now, the number of weeks you're eligible for, let's move forward a little bit. The number of weeks you're eligible for is between 10 and 21. 10 is the minimum amount of weeks you can collect, or you could be eligible for unemployment insurance, and 21 is the maximum. So how do we get those numbers? Okay, so this person's eligible for the minimum. And the reason why they're eligible for the minimum is if you look at the consistency of their work history, it's pretty bad, right? For example, if somebody earned $10,000 every quarter, $10,000 second, third, fourth, and first quarter, they would be eligible for the maximum amount of weeks, which is 21 weeks, because they have perfect consistency in work. This person, if you see, they have 8,000, 1,500, 500, and 3,000. They're kind of up and down. There's a formula that the less consistent it is, the less weeks you have available. In this case, this person has 10 weeks available. So weekly benefit amount. So the minimum amount for a weekly benefit amount is $72. The maximum amount is $568. So what does that translate to? If you have $1,872 in one quarter, and that's your maximum, $72 would be your weekly benefit amount. That's 1872 divided by 26 is $72. The maximum amount possible is 14,768, or sorry, 568, which equivalates to having $14,768 in one quarter. 14,768 divided by 26 comes out to $568. If you had more than that, let's say you had $20,000 in a quarter, it still maxes out at 568. So once again, total benefit weekly amount 10 to 21. 10 is the minimum, 21 is the maximum. That 21 can change depending on how high unemployment insurance is the previous quarter. When unemployment insurance is high, more weeks can become available. When it's low, there can be less weeks than 21, which gets really low. Currently, unemployment insurance is relatively low. Okay, so that was the first part, monetary eligibility. You guys see how we calculate monetary eligibility. The claimant also has to be personally eligible, right? To be personally eligible, there's 4 criteria they have to meet. They must be out of work through no fault of their own. Typically, that means something like a layoff or a business closure, something like that. Later on in the presentation, Louie will discuss separations, how some people might be able to get by, even though it's not a layoff or a business closure. They must be fully available for work. For a claimant to be able to collect unemployment insurance, they have to be in their area. They have to have childcare. They have to have transportation. They can't be locked up in jail. If they're going to school, it can't affect their ability to seek and accept work. They have to have all of those parameters met. They must be physically able to work. Basically, everybody has to be capable of doing some kind of work in their labor market for them to be eligible to collect unemployment insurance benefits. Now, that's not to say that we expect the same thing from everybody. We don't expect a 75-year-old person to carry 100-pound bags of cement or anything like that. They just have to show some type of work they're capable of doing, and that type of work is available within their local labor market. Okay. And the last thing, they must be seeking or returning to full-time work. So most people, when they're out of work, they are required to look for jobs. Currently, at the Department of Labor, just changed. It used to be 2 jobs per week. It has just changed to 5 jobs per week. Claimants are required to apply for 5 jobs a week. They're required to document those every week when they certify for unemployment insurance. Every week, they basically certify, tell us what they did in that week. They're asking for a check. They have to have 5 job contacts in there. Those 5 job contacts, we don't have enough staff to check all of them. However, we do have a program where we randomly spot check people's job contacts to make sure that they are actually doing their job contacts as required. The other thing is they could be returning to full-time work. We call these people job attached or employer attached. Employer attached people, they are working full-time for you and you have a layoff. This is typically going to be like landscaping or work at a ski resort, something like that, where you have a time frame that you lay them off and then you're going to bring them back to work. Idaho is one of the longest states that there is on how long you can be employer attached for. Idaho has like 16 weeks of employer attachment, where other states have much less. Like I want to say Washington and Oregon have like 3 or 4 weeks you can be attached for. The reason for that is we do have a lot of lumber type work up north. And if we were to shorten that, they would lose a lot of their workforce. So the legislature has come up with 16 weeks of employer attachment that they could be still attached to another employer and collecting unemployment insurance. So work seeking or employer attached, there's different parameters for each. All right. Chargeability and liability. This is probably what you guys are really interested in. So let's talk about how we can keep you guys from being chargeable or liable. There are 2 types of employers in Idaho. We have experience rated employers and cost reimbursement employers. So experience rated employers and cost reimbursement employers both submit a quarterly report that shows all the people they work with. Experience rated employers pay their tax rate on those people each quarter. Cost reimbursement don't, and I'll get to that in a second. Now, most of you guys are probably experience rated employers. And the way it works, experience rating is actually a little more time consuming than some other states do it. Some other states will have the same tax rate for everybody straight across the board. I personally don't think that's fair, and the state of Idaho agrees with me. And that's why we do experience rating, because if you have many people filing for unemployment insurance, then your rate goes up with us. If you have very few people filing for unemployment insurance, your rate goes down for us, which is more, it's a fair situation where you're having, if you do a really good job of keeping your people, you pay less in unemployment insurance because you're not using the system, right? Or using the program at all. Why should you be paying more? Versus somebody like landscape companies typically have very high unemployment insurance rates because they do lay off pretty much their whole staff in the winter, and those people are all collecting benefits. So it is a little more time consuming to do that instead of saying just everybody pays the same. Like I said, to reiterate, we keep a ledger of every business, all the money you've paid in for unemployment insurance, all the money that's been paid out on your behalf, and then they determine what your rate is. Cost reimbursement employers are liable for their proportionate share the whole time. So they don't pay a quarterly tax, but they do pay in a different way. So let's go and explore experience rated a little bit more, and then we'll get to the other ones. So experience rated employers, excuse me, they pay a quarterly tax, like you guys said, or like we were just talking about. Tax is based on experience ratio. Remember, amount paid in versus amount paid out. The highest rate that you can pay in unemployment insurance tax in Idaho is 5.4%. Once your rate gets so high, it caps off at that. And the reason is because at some point it becomes too excessive and people can't really run their business because there's too much unemployment insurance tax coming out. Entry level rating, if you started a new business today in the state of Idaho, you would pay 1%. That's your unemployment insurance tax. The lowest current rate is 0.281%, so very, very low. It's interesting, sometimes you get these tax reports and it's like $8, very low. But wage-based, so you only pay taxes for unemployment insurance on the first $53,500 somebody earns within the year, right? So if you pay somebody $25,000, you're going to tax all of it. If you pay somebody $55,000, you're going to tax that first $53,500, but that last $1,500, you're not going to tax any more wages on it. So let's talk about the fund for a second. So the unemployment insurance fund that you pay into, like I said, is a big pot of money, and that big pot of money is used to pay out benefits. Idaho does a really good job of trying to keep that fund big enough to handle recessions, small enough so we're not taking too much money out of your guys' pockets. We want as much money in the pockets of the employers as possible because we want you to grow your businesses and we want you to employ more people. We want all the people employed, right? So we don't want to take an excessive amount. Now, there are times where your tax rate will go up or down, and it's nothing that you've done. For instance, 2008, 2009, the Great Recession, everybody got laid off, everybody was out of work, our fund shrunk pretty quickly. So in those situations, we have to raise taxes the following year. But we try to keep it so that we don't have to do that. We try to keep it so if there's a small recession, we can weather that storm and not have any effect on you guys. That's the plan. But like I said, we also try to keep it from being too big because we don't want to take money out of your pocket. So it's a balancing act that we're constantly reevaluating. This usually comes out the quarterly tax rates usually come out in December, I think, or they calculate them in December for each new year. They've been pretty low for the last few years. Okay, cost reimbursement. Cost reimbursement, there's probably some of you guys in the audience today. Usually they're nonprofit organizations. So what does that mean? Government entities, the Department of Labor itself is a nonprofit organization, so they are cost reimbursement employers. Public schools are cost reimbursement employers. Some 501c3s that are, not for profit, some of those could be cost reimbursement. Like I said, these guys still send in a report every quarter, but they do not pay any tax on that report. But with that, they're always liable, which means they pay their proportionate share of what the claimant receives in benefits. And I'm going to get to a point, I'm going to explain that to you a little better. But let's just say it this way. Let's say somebody who works for the Department of Transportation has been working there for 10 years for the Department of Transportation. They get laid off. So they get laid off and they come in, they file unemployment insurance and they start claiming benefits, right? At the end of the quarter, we are going to send them a bill for the exact amount of benefits that they took out, right? So if they took out $7,000, cost reimbursement, Department of Transportation could get a bill for $7,000 for that guy and have to write a check for it. So that's how cost reimbursement works versus experience rating. Kind of like you have car insurance for, emergencies, right? But if you don't have car insurance and you wreck your car, you're paying out of pocket versus you have car insurance. It's going to maybe make your rates go up a little bit, but you're not paying everything out of pocket. So that's basically the difference. Chargeability. This is important stuff. Chargeability refers to whether or not employer's account will be held chargeable for the benefits paid to the claimant. So remember, like I was telling you, you've got your account, somebody gets laid off, they file for unemployment insurance. Will those charges apply to you? So how they determine that is that it depends on the reason for separation. Like I said, if it's a layoff or it is a business closure, you had to reduce hours, something like that, those guys, that will be chargeable to you because the reason for separation is a business reason. If the person was caught stealing, things change, right? So let's go and kind of talk about this a little bit. Let's look at these companies. So K&K Holdings Company, Louie Construction, and Veteran Staffing Services, LLC, right? K&K Holdings Company is the company that paid the most during this benefit year, right? You guys can see that they paid $9,500, give or take. Louie Construction paid around $500. Veteran Staffing paid around $3,000. So K&K Holdings is the major base employer. So they would be the company that is held chargeable. Okay. Now let's say if you look, this claimant has had 2 employers since leaving K&K Holdings. Let's say your company is K&K Holdings. They work 2 separate places. Well, we're still going to contact you and say, why did you let this guy go? Why don't they work there anymore? And depending on what you say will depend on whether they're chargeable or not. Let's say you fired them for theft and you can show it. You will not be held chargeable for that. That's not your fault. That is the claimant's fault. We don't hold you chargeable for that. But we have to look at it. So in this case, let's say K&K Holdings discharged somebody for theft. We proved it, so nobody's held chargeable. Louie Construction is not the major base employer. Veteran Staffing is not the major base employer, so neither one of those guys are going to get charged. So nobody's getting charged for this. It's coming out of the general fund. Now let me step back for a second and say this is why I always tell employers you kind of want to have a probation period, right? Because if you find out somebody's not going to work out and you let them go early, the likelihood of you being the major base employer gets far lower, and the likelihood of you being the chargeable employer gets far lower. So just a tip that might help you save some unemployment insurance cash down the road. Okay, so how is it determined? What is the major base employer? We discussed that. Who is the major base employer? What's the base period? Cause of final separation. So let's just say it one more time. Major base employer here is the one who paid the most amount of money. Okay. Whether they're chargeable or not depends on what the reason for separation is. Now let's talk about let me say one more thing here before I move on. Okay, let's talk about cost reimbursement employers. Okay, so let's say that K&K Holdings is experience rated, like most of you probably are. Louie Construction also experience rated. And let's say, just for the sake of argument, Veteran Staffing Services is actually cost reimbursement. Okay, so they're the cost reimbursement employer. When they determine how much is owed, they're going to take the commensurate amount out of Veteran Staffing Service. So let's see, that's $9,500, $10,000, about $13,000 total wages in this benefit year. 3,000 of that, give or take, is from veteran staffing. That's like little under 25%. So Veteran Staffing Services, if they were a cost reimbursement, at the end of that quarter would pay 24% of this guy's benefits in a check. They get a bill for 24% of that guy's benefits. They'd write the check, and that's how they would pay. Just so you guys can understand the difference. Whereas the experience rating is just going to report the wages. Okay, so we got through that one. Okay, so major base employer is chargeable when, excuse me, there's a layoff due to lack of work, reduction in hours. We kind of talked about this. A discharge that is not due to misconduct. Louie is going to cover this more in depth, but if the claimant didn't do anything wrong, they can still be eligible for benefits even if they're discharged. Or a quit with good cause. If a claimant quit and they have a good reason for quitting, they can still be eligible. Quit with good cause is typically in the state of Idaho. Usually if you're going to be allowed for quit with good cause, it's usually due to an illness. You got sick because of your illness, you're incapable of continuing that type of work. That would be a good cause quit in that case. But let's talk about it. So chargeable, right? Not chargeable. You are not chargeable if the claimant is discharged for misconduct. If the claimant quit with good cause, so discharge for misconduct, theft, something like that, you can show it, misconduct, they're not getting paid. Quit without good cause. So quit without good cause. I didn't like the job. I didn't feel like I was being fulfilled or something like that, or some situation like that. That's not a good reason for quitting. In Idaho, it's very hard to get benefits if you quit a job because you have to be able to show good cause, and it's very hard to show good cause. A voluntary reduction in hours. If a claimant reduces their own hours, you're not held chargeable. It's not your fault that they decided to cut their hours. You have hours for them. They've cut them back. We're not going to pay them or hold you chargeable even if they do get paid. Once again, not chargeable with medical quit. So let's talk about that for a second. I said that you could be chargeable if the claimant quits with good cause. That's except for medical quit. If somebody quits because they can't do the job anymore, that is not your fault, and we don't want to hold you chargeable for that. I'm physically incapable of continuing to work, or mentally incapable of continuing to work. I'm not able to do it. I have to quit due to a medical reason. We're not going to hold you guys chargeable for that. So the first two parts of this slideshow are done. What is unemployment insurance and how is it applied? Please, if you have questions, I want you to make sure that you're going to give them to us. You can write them down in the chat. We'll talk about it later. If it is about a specific case, like I said, please wait until you can call us. We'll give you our numbers so you can call us specifically about that. And I'm going to turn this over to Louie to talk about separations and fraud.
Hello, everyone. This part of time, we're going to talk about when a person becomes unemployed and the separations that are involved and how we address those separations with you. Obviously, if a claimant is discharged, or if they've quit, we're going to have to do some fact finding on that to determine the reason why they're unemployed, quit, or being discharged, and whether they meet the criteria to be eligible under those situations. So on the burden of proof, on a discharge, the employer, which is you bear the burden to establish the reason for the discharge, and you also have to the burden of establishing whether it's due to misconduct or not. And that's why when a person does file for unemployment insurance benefits, and we first send out a notice of claim filing to you to let you know that one of your past employees has filed a claim for unemployment insurance benefits, and that we're going to be contacting you to gather details, information as far as why you let that person go. And as it says here, a discharge, you bear the burden to establish the reason for that. And if there's misconduct involved, we're going to be asking you some questions on what happened, why you let the person go on that day. And we're going to be not only asking you for the details of the timeline of that discharge, we're going to ask you for supporting documentation. And we're not doing this to pry, but in a sense we are. As you bear the burden, and our assumption is you don't know exactly what is necessary to establish misconduct, to meet the criteria or disqualify a past employee for benefits. So we're going to ask you a lot of questions. We're going to look for details. We're going to look for timelines. And the main thing we're looking at is what happened on that last day, the last situation, on what made you determine to let this person go, decide to let this person go. And then what we're going to do is ask you for the timeline of related situations that led up to that, such as if a person is discharged due to attendance, we're going to ask you when was the last day they missed work. We're also going to ask you when was the last day they worked, because we're looking for if you allowed the person to continue working since that last situation where they missed work. We're going to need to know why. And it's a requirement that we ask this time, get this timeline from you, because if a person has done something really bad and you allow them to continue working, it's going to be hard to say it's truly misconduct. It wasn't that bad if you allow that person to continue working. So we're going to look at the last day of work, the final incident that made you decide to let that person go, and any relevant information as far as a timeline that led up to that. So if a person has a problem with attendance and you let them go the day after that, we have a good timeline as far as last day of work and the final incident. And then we're going to ask you for all the details or the timeline that led up. Has that person had problems with their attendance in the past? We're going to ask you for the dates. We're going to ask you why they missed work, and hopefully you'll know, because it is critical. We're going to ask you if you gave them warnings. We're going to ask for verbal warnings, and we're going to ask for written warnings. And we're going to try and get the whole timeline mapped out to find out what this person did, what you did to try and correct the behavior, as far as letting them know that it's not acceptable and that it continued, and that's why you let them go. And that's the timeline that we're going to be looking for. Once we get that timeline, we're going to ask you for supporting documentation. First, we're going to document basically verbally in writing what happened, what led up to it. And then we're going to ask you for you to provide supporting documentation. We're going to ask you for your policy. We don't want your whole policy. We just want the part of the policy that that person violated. So if it's attendance, we just want the portion of your policy regarding attendance. We're going to ask you for acknowledgement of that policy, having your employees sign for your handbooks and your policies, making them aware of that. That's what we're going to need. If you gave them verbal warnings, we're going to ask you who said what, when, and why. And what we're doing is getting that timeline. And then we're going to ask you for documentation to support that. So the person that gave that verbal warning, we're going to want a firsthand statement from them. Hopefully there's someone witnessing the verbal warning being given. We're going to ask for firsthand statements from that person too, as far as what they heard and saw, what was communicated to the employee at that time. And it seems like a lot of information, but we're trying to inform you of what's necessary to support your position as far as why you let that employee go. If it's a written warning, hopefully you had them sign it. That's the best case scenario. And we're going to ask you for copies of those written warnings. And with that, it's going to be a good timeline, and it's going to support the reason why you let this person go. And the reason why we first document all the information, we're going to call you up and ask you all these questions to get these details, and then we're going to ask you to provide the supporting documentation, the policy, the warnings, witness statements. The reason for that is we have to offer your ex-employee rebuttal opportunity. So we're going to share all this information, the final incident, the last day work, any warnings that were given, written or verbal, and we're going to ask them if they agree with all this information. Now, if we ask you for details and we ask you for supporting documentation and that supporting documentation does not come, we give deadlines and a deadline passes and we didn't get it and we went for rebuttal to the claimant. If they say that didn't happen, whether it did or not, all we're looking at that point is the he said, she said situation. With that, we will come to you one more time and say, we shared the information with the past employee. They disagree with whatever is there. And we're going to ask you one more time to provide that information to support your position. It's not that we believe you or believe them more. It's a matter of we're looking at the information that we have as to the reason why this person is no longer employed with you. And if it's a he said, she said, you have not borne the burden to establish misconduct at that point in time. And that person, even if they had the problems and all the warnings were given, if they dispute that and you don't provide supporting documentation, that employee will be allowed benefits. And with that, if there are allowed benefits on that separation, if you're the major base employer, your account is going to be held chargeable. And so what we're doing is we're trying to get you to be aware of what is necessary to support your position, especially if the person was discharged due to misconduct, to support your position on that and have those benefits denied. Because we're here to pay benefits when benefits are due. If a person doesn't meet the criteria and shouldn't be eligible, we want to deny benefits if they're not entitled to those. So the burden rests with you as the employer, as the moving party. So that's why we're actually going to contact you and ask you a lot of questions. As far as a quit, the claimant is a burden to establish a good cause for quitting. And so we're going to start our fact finding once they file their claim with them, and we're going to do the same thing with them. They bear the burden. They have to establish that they quit. It has to be connected with the employment, and it has to be for a good cause. If they can do that, they can be found eligible for benefits. We're going to ask them the same thing. We're going to ask them for the last day of work. We're going to ask them for the final incident that made them decide to quit that job. We're going to ask for the timeline. It's all the information that questions we're going to ask you, we're going to ask them the same, but it's based on them and that employee bearing the burden to establish good cause for quitting. So again, the claimant will be denied benefits if you can establish, or we can get you to provide the information and supporting documentation to establish misconduct. And how we define misconduct is a willful disregard of the employer's interest, a deliberate violation of reasonable rules, and a disregard for standard of behavior that the employer has a right to expect. It's a reasonable right to expect. So what we're looking for is, if it's truly misconduct, if they've done something wrong, we're going to really work with you to try and get that information to support the position. And really, going back to the timeline, we really want to get all the information up front from you before we even talk to the claimant. And we want to wait and get all the documentation to support the finding of misconduct before we offer rebuttal. It's going to save time for you. It's going to save time for us, and get the decisions out for you and the employee, the claimant that we call them, to determine whether they're eligible to get the decision, so everybody knows the outcome. So if a person is actually discharged or let go and it's due to no fault of their own, such as a medical situation, or during the probationary period, they were trying their best, they just weren't capable of meeting your expectations, and you let them go, hopefully during that probationary period of time, that's not misconduct in any way. And that person actually should be entitled to eligible for unemployment benefits based on that reason for that separation. So I've kind of explained what we need. We're going, like I said, we're going to ask you a lot of these questions. Last day of work is critical for the final incident leading up to that separation. We're going to get that timeline going leading up to it. How you inform the employer, the claimant, excuse me. We talked about verbal warnings, written warnings, policies. The whole idea, and what I see policies, employer policies are, they're a guide to keep and retain good employees to kind of, if they're not doing exactly what you need, trying to, get them on board with your expectations, or to let people go if they're not going to work out. That's what I believe the employer's policies truly are about. The warnings that you give, like say verbal warnings, if they are, just verbal, try and have a witness there. Someone that can say, yes, I saw this person tell that employee whatever it was as far as what they were doing wrong, and what they needed to do to correct that. The conditions of the job is something that we look at. If the employee is not doing something right, and that's what led to the separation, we're going to want to know what was the expected behavior of that employee, and what did they do to not meet that expected behavior that caused separation. So we're really going to go into details on that. On quits, like I say, the claimant is the moving party on the quits, and the reason for the quitting has to be connected with the job. So it can't be anything personal. If it's not tied to the employment in some way, it's not going to be considered a good cause, and that person is not going to be eligible for benefits. Again, what we're going to be asking is for the documentation that we department needs here is we need that last day of work. Why did the claimant quit? The conditions of the job. Again, when we're looking at what did the claimant expect the employer to do when they quit if something happened, they decided to quit. What did they expect the employer to do? A good way to look at it is if payday is every 2 weeks on Friday, and now payday is not being met, it's 2 or 3 days late. Well, that's the expected behavior is every 15th and 30th or whatever the days are, payday is on those Fridays. And if they're not being met, what happened? Okay, why wasn't it? That's why the claimant quit, because they weren't being paid on time as scheduled. We would still expect that claimant to come to you as the employer and make you fully aware of whatever the situation is. Give you the opportunity as the employer to address that situation, make it right or good, if it's reasonable, that is. And like say, allow you to correct it. And then if they did all that, we expect them to pursue all reasonable alternatives. So letting you know, giving you the opportunity to address their concerns before they quit. If they don't do that, more likely than not, if they don't make you aware of the situation or the problem they're having, give you the chance to correct it, it's going to be hard for them to establish good cause, because they still are required to pursue all reasonable alternatives, as we call it, before quitting. So what options were available? Again, I've kind of talked about this several times. Like I say, when we contact you, we're going to ask you a lot of questions. We're going to ask you for certain information, supporting documentation, copies of relevant policies, just that part. Sometimes we ask for the policy and we get the whole handbook. We don't need that. If we get the whole handbook, we actually are going to save that and keep that in the file. And most of it is not necessary to the case that's being addressed. So just give us the portion or the section of the policy that was violated, acknowledgement of that policy, claimant signature on the policies that you have, the handbook that you have, signed written warnings. Written warning is always better, holds more clout, claimants acknowledging, than a verbal warning. Verbal warnings are valuable too to support your position, as long as we can get witness statements to support that did happen. First-hand witness statements. If something happened on the floor, the claimant did something that they shouldn't have, we're going to want witness statements of people that saw that. We want them to give us a full description, a timeline, what happened, when, who said what, where, when, and why is the best way to go. And the reason why we're going to actually, like I said, offer or ask this information of you is because if we go to the claimant and just tell them the employer said you were discharged for this reason, if they say no, that didn't happen, I never did any of that, we're going to come back to you and explain that to you, that the claimant's disputing that. Are you going to be, or can you provide information to support your position? And if you say no, we're going to explain to you that we're going to make our decision based on what we have in the file at that time, or we're going to give you a couple days to provide that information. And hopefully you provide it by that deadline, because if that deadline comes up, it's usually at 2 business days that we give you to respond anytime we're requesting information. But if that deadline passes and we didn't receive it, we are bound to make a decision in a timely manner. And we're going to make the decision based on what we have. And if it's a he said, she said again, that claimant is more likely to be eligible, and your account will be held chargeable for that claim. So again, if it's time cards, if it's a matter of attendance, we're going to ask you for proof of them being late and the reasons why they were late or missed. So once we go through the whole fact-finding process and we make our decision, we'll mail that out to both you and the claimant gets a copy. And you want to take time and read through that. And, you know, hopefully we've given you the due process. You understand what information has been provided, what the claimant has responded with, and the decision is made, and that you're going to understand why that decision was made the way it was. Now, if you disagree with that decision, you do have protest rights. You have 14 days from the day that that decision was made and mailed out to you to protest that. And either party, you can protest that decision or the claimant. Both parties have the right to appeal that decision if either party disagrees. So how do we file for a protest? It has to be in writing, must be in writing, and it's signed by you're an interested party. So it'll be signed by you if you're protesting. The claimant's an interested party. It need to be signed by them if they disagree with it. What we want you to do is on that written request for protest, include your business name, your address, your phone number, the claimant's name, and their social security number. And what you want to do is you can mail it to the department at the Idaho Department of Labor, attention to the Appeals Bureau at 317 West Main Street. You can fax it to the fax number here. We have 208-334-6440, or you can email it to the appeals mailbox at labor.idaho.gov. But it needs to be received within the 14 days. Now, if it's going through the mail, it needs to be postmarked within the 14 days. Once the 14 days are up, that decision has gone final. Okay, just letting you know. So there is timelines involved with everything, and you do want to respond in a timely manner. There's been recent legislation regarding new potential employees, the applicants that are filing or applying for jobs. They haven't been showing up or responding to requests for either interviews or applying or actually accepting the jobs. And the term ghosting is what we have here. And what we want to let you know is that with this new legislation, if you let us know that you've asked a person to come in for an interview and they fail to respond or to that request for an interview, if you let us know, we can actually look and see if that person is filing for unemployment insurance benefits. And if they are, we can stop the claim right there. We're going to do an investigation, and we're going to find out why that person did not respond to you requesting an interview. Also, if you schedule an interview with a potential employee and they don't respond, they don't show up to that scheduled interview. If you let us know, we can look and see they might not be filing for unemployment, but if they are, we're going to be able, again, to stop the claim right there, investigate, and find out why. Is this person truly doing a viable work search? Are they truly doing what's necessary to find their next job? And if you offer that person a job and they refuse it, we definitely want to know about that, because work refusal of suitable work is going to be a denial of benefits. So keep that in mind. And I do have an email that will show you as far as when a person ghosts you, how to let us know about that. And when you do, if you send the email to us, we will send an email to you letting you know that we received it. We're going to review the information. If they filed for unemployment insurance benefits, we are going to follow up and potentially, investigate and potentially deny that person benefits. We are also going to let you know if we need more information. So if we get some information, some might be missing, or that claimant might say it didn't happen, we might need to come to you and ask you for proof in order to show that this person did not do what they're supposed to do as far as showing up for your interview, making the interview appointment, or accepting the job. And there's another program that we have, and it has to do with more of our employment services. Any claimant that is work seeking required, we do require them to attend. It's a reemployment service and eligibility assessment interview. And what that is we have them meet with our consultants, and they will determine or look at what they've been doing to try and find work. Also, they will look for suitable jobs that we have listed in Idaho Works, which is our employment program for employers to use to put in job orders to get potential applicants from people that are registered with the Idaho Department of Labor. And we will, in our assessment interview, actually refer them to job service referrals. And with that, if you haven't been using the Idaho Work system to list your job openings, I'd encourage you to do so, because that'll put your position in the pool of potential referrals when we have these interviews with our unemployed claimants, and they can be referred out to potentially your position. So consider that registering and putting your job openings with the Idaho Works. Now we have this other program. This is really a good program. It's called the SIDES program. It's a State Information Data Exchange System. So when a person files for unemployment insurance benefits, and we send you out notification of that filing, and then we call you with all these questions and asking for all this information to support the reason why this person is no longer working for you, we're doing it basically on our time. This program, the SIDES programs, it's an electronic exchange of information that you can register for. And what it does is it allows you to do all this more or less at your time. Okay, there are timelines. You do need to respond within 7 days when a person files a claim with that information as far as why you let them go. But with the SIDES program, if you are registered with this system, it's going to notify you that a past employee has filed for unemployment insurance benefits. It's going to send you an email on that, and then you can go into the SIDES system once you're registered, and you can actually see all the questions that we would be asking you over the phone. You can actually do it online. And so you're going to get electronic information as far as the person's filed for benefits. You can go in, you can answer all the questions, provide all the supporting documentation that we're going to be asking you over the phone, but it's more at your leisure, at your time, within that 7-day period of time. And as you can see, most of the states are registered to have the access to the SIDES program. And it's been a really useful tool, and employers really like it once they actually get involved with it. So again, it's a national internet-based exchange system. Person files for benefits. If you're registered, the system's going to notify you of that, and you'll be able to provide all the information regarding why you let that person go. The benefits of the SIDE program, it saves on postage because it's all done electronically. You don't have to worry about that. The timely response, you're notified of the person filing. You have 7 days to do it. Respond to the information as far as why the person's not there. There's less chance for a follow-up because you have all the questions right there. You know why you let that person go, and you can provide the supporting documentation too. Less chance for an appeal because you're going to be able to provide all the details and the good information. Appeals, usually when we get involved with appeals, it's because something is missing or someone didn't respond with supporting documentation. But with the SIDES response system, you have the opportunity to provide everything that you need to for that decision on whether the person's eligible for benefits or not. So it confirms about 7 days response. Helps control your UI tax rate, because if you're giving us good information as to why you let that person go, we're making better decisions as far as whether they're eligible or not. And if it's truly due to misconduct, that's where we can get the information, okay, to make that good decision. It's free to you as employers, And the good thing about it, coming towards the end of the year, you're going to be able to get the decisions through the sites system as well. So that's going to be an added benefit. How do you sign up? You go to www.labor.idaho.gov/businesses/sites, and it'll walk you through how to get your business registered with the sites program. Another thing that really helps us and you with your experience rates are reporting your new hires. If you don't report your new hires, we really don't find out until you file your quarterly reports. And we're way behind the curve as far as timeline. And a person, a bad actor can actually find a job, they're collecting unemployment, and they continue to file unemployment while they're employed. Okay. And what happens is when you report your new hires, and you do it within the first 20 days, we've actually narrowed the potential of fraud being involved with people continue to file their weekly claim reports and working at the same time. We catch them a lot quicker. So if you can please do that, go to our site at www.labor.idaho.gov/new hire and report your new hires within this 20 days. And then, it keeps everybody fair and honest, and us paying benefits when they're due and not paying them when they're not. If you've actually rehired any employee that hasn't worked for you in the last 60 days, we'd like you also to go and report those the same. So basically, it's stopping people receiving benefits when they should not be receiving them because they're working. So reporting potential fraud. How do you report that? We actually have a website here that you can go in, and actually has a series of questions for you to provide information as to what's going on if you think someone is committing fraud. And here is that email. If someone's ghosting you, they don't show up for your interviews or your application, setting up an interview or applying for your job or refusing your work offer, the email is the work.refusal@labor.idaho.gov. And once you receive that email, like I say, you will receive notification back that we've received it, we're going to investigate it, and we may contact you with more information. And same with the fraud, the website here to report fraud. The more information you give as far as why or how this person is committing fraud, the more likely we're going to be able to research it, and confirm it and stop benefits. And confirm this person either should be eligible for benefits or deny them and stop payment going out if they're not entitled to them. So here we go. We have an employer fax number for when we're asking for information to be supplied and documentation to be supplied. It's 208-639-3255 for a fax. Or if you just have questions that you want to call in about unemployment insurance, 208-947-1055, and we'll be happy to answer any questions you have as far as anything regarding unemployment insurance benefits. Here we have some information that our Bureau Chief for Unemployment Insurance Benefits, Josh McKenna, has listed that will help protect your account as far as chargeability for unemployment insurance. So it's just some good guidelines to have. So issue a handbook or a policy statement to each employee. And you do want each employee to have access to this information. And so if you give them a handbook, also get an acknowledgement, have them sign off that they did receive it. That way it's on them, it's their responsibility to read it and be aware of it and to abide by it. Issue written warnings signed by employee and have witnesses available too. That just goes to confirm that something has happened. The employee was made aware that this behavior isn't acceptable. And if it continues, the consequences are potentially you can be discharged. And then if they come and file for unemployment, it's easier for us to say, here's a warning, here's signed. They really can't dispute that if their signature is on there. Have consistent methods for conveying policy changes. So if in the middle of the year, something changes within your policy, make sure everybody is made aware the same way as far as those changes it's best to get an acknowledgement, have them sign something. So on this date, we know that your policies have changed and you made your employees aware of it. So there's no dispute on that. Deal with problems the same way for all employees. That is critical as far as making employees aware that, everybody's treated the same. If it turns out that you have favoritism and some people are treated differently than others, and the claimant brings that up, I did this, I was fired, Joe did the same thing, they were not fired, it's going to be hard to establish a finding of misconduct if you are treating employees differently. Okay, so just make sure everybody's dealt with the same. Tell us about that last incident causing the discharge. We talked pretty in depth about that. Provide firsthand accounts of what happened. We mentioned that. Provide any and all supporting documentation. That is what's really going to help support a finding of misconduct if we do get that documentation, because it cannot be disputed. Respond to requests for information in a timely manner. That's one thing that you're going to, if you haven't dealt with us in the past, when we do contact you, when we do ask for information, or if we have to leave a message because you're not available, we are required to give you a minimum of 2 business days to respond. But after that 2 business days, if you haven't responded, we're going to move on with our fact-finding process. We may contact you again, we may not, depending on what we get from the claimant. And monitor your online account regularly. That'll just help you be aware of what's going on in the unemployment insurance programs that can affect your ratings. So here's our contact information, and feel free to write this down. And we're here. Any questions you have regarding unemployment insurance benefits, that's what we're here for. We're here to help you better manage your business and your experience rating when it comes to letting people go.
All right. Good job, Louie.
Thank you.
Okay, so we're going to go through some questions now that we've received. We're just going to go in the order that we got them. So bear with me just a second while I take a look here. April Uriarte, I hope I pronounced that correctly. Amendment forms. We cannot do this online. It would be easier if the information auto-populated for wages. Then you could submit the change. Less work for both sides. No manual handwritten forms. Okay, so just so you guys know what she's talking about, amended reports. If you submitted your initial report and you have to make changes later on, there's not an auto way to do that. You have to actually fill out a paper report and send it in. I'll tell you the truth, April, I'm not really sure, as we don't work on the tax side. I used to, but I don't anymore, so I'm not really sure. I know they're putting a new program together. I'm not sure whether or not or when that part comes in. So if you would, could you just email me that question to my email address, and I will follow up on it with tax, and I'll get back to you. Also, just so you know, Clinton was just telling us previously that there is going to be a tax presentation coming up shortly. So you might want to sign up for that, because they'll probably be able to give you better information on that. So thank you. Next question. How does an employer ensure they are notified when an employee files a claim? So it should be auto. When they put their employer information in there and they filed the claim, it should auto send it to you. I recommend being on sides. You get it faster that way. There are weird situations where the claimant doesn't provide that information to us up front, and we hold up his claim until he does. You should always receive that. If you don't receive notice, if you've gotten something and you didn't receive notice, please contact us and we'll check and see if there's some mess up on our side. But you should be getting those every single time. All right, you want to cover this next one? Dan Duvall, reduction in hours due to poor performance.
So when a person is having their hours reduced due to poor performance, it's actually a disciplinary measure that we're looking at. And we want to know, is it a temporary reduction or is it a permanent reduction? If it's a permanent reduction, we're going to be looking at that as a separation, a discharge from the full-time to the part-time position. And we'll rule accordingly as far as eligibility based on that. If it's a temporary situation, we're going to be looking at it as they're still fully employed. There's just a problem in that you're working with them temporarily, and they might be considered not unemployed, even though they're not working full-time. It's kind of like being on a leave of absence in a way. But we're going to look at the reason why. I mean, it's going to be kind of hard to say it's misconduct if they've done something wrong, and yet even though you reduce their hours, you're still allowing them to continue to work. So we're going to look at that whole thing. It's always going to be a case-by-case situation for the reason for the reduction in hours.
Okay. Blake Hollingsworth, we have an accepted offer. This new employee came in and starts on new hire paperwork and new hire training. When the background check comes back, they are no longer eligible as the employer held responsible. So short answer is no, but let's talk about that for a second. So it kind of depends. If the claimant indicated on their new hire paperwork that they were not, that they had no felonies on their background, no misdemeanors, no nothing like that, and then you later find out that they did, well, that's the claimant being dishonest up front. So you would never be held chargeable for that. If you never asked that and hired them and put them to work, and then later found that out, you could be held chargeable because you didn't ask them why beforehand. You didn't put that on the table. So the claimant started working normally, and then you found out later you couldn't have them employed anymore, had to let them go. Now I will step back and say this, remember, the likelihood of you being chargeable for that, if you found out about it quickly, is very slim, right? Because you didn't have that claimant working for very long. We might decide, well, the employer never asked him about any misdemeanors, and then later fired him for it. Not the claimant's fault. They didn't know that they had to disclose that information, so we might pay them. But if you only had them working there like a week or something like that, the likelihood of you being chargeable during that base period is very, very small.
Let me add something. What we're looking at is the terminology. Usually it's a pre-employment background check, or it could be a pre-employment drug screening. The key is going to be pre-employment. So if it's pre-employment, you should be doing these actions before you allow the person to start working. If it's blind and you didn't ask them if they're about their background check, like Justin said, and then you allow them to continue working, okay, that's going to be, it's really pre-employment. You kind of took some of the risk to allow this person to start working before you got that information. There's a good chance that person is going to be allowed benefits if there's no deceit, or falsification on their application process. They're going to more likely be allowed benefits during that situation. So if anything's pre-employment, hold off having them to start until you get that background check or the drug test back before you allow them to work.
Yep. And once again, just to reiterate, if they lied up front on the application, we're going to deny them because you were going on good faith taking what the claimant said. So if they lied, we're going to deny them. But also, as long as you move quickly, the chance of you being chargeable is very small because you haven't paid them very much wages. And remember how we looked at the chargeability before? Okay, so let's see. Is there a timeline after separation? Oh, who is this? Chelsea Booth. Is there a timeline after separation for requesting benefits from a claimant? I'm not quite sure. You mean, let me take it as I think I understand it. The claimant files a claim. How long are you potentially on the hook, I guess I should say. So let me see if I can real quick get back to a slide here. Okay, so here's our potentially chargeable, right? So if you had, let's say, employed this person in the first quarter of 2024, a year from now, that quarter is rolled off. So that person can't use your wages anymore to collect benefits, right? It's gone, can't use it anymore. So if that's what you're requesting, is how long does the claimant have to file for benefits on your company? It's usually about a year. sometimes a little bit longer because we have to look at the first 4 of the last 5 quarters. So put it this way, within a year and a half, that person should be out of the base period and can't use your company anymore. There are some weird situations where they might be able to with a amended base period or something like that, but pretty much that's the answer. So let's see. Next question. Will decisions eventually also be uploaded into sides?
Yes, we're going to have those by the end of the year. We'll actually have decisions available on sites.
And we're looking forward to that. That should be fast and easy for everybody. Maria Cookston. Oh, never mind. It's on the slide. Okay, you got it. Once we enter a response, this is anonymous. Once we enter a response in sides, why are we then contacted via phone or email and asked some of the same questions?
I'll get
You
that.
got them?
What happens is you provided some of that information. We have a requirement of specific details that we have to get that's federally mandated for us to ask of you. So if you've given us some but not all, we're going to contact you to try and get the rest of this missing. So it's just a matter of what the assumption is you believe and you think you know what we're looking for or what we need to support the position that you have or the reason why you let the person go. But if we don't have all the supporting documentation or the timeline or just the details, we're going to come back and ask you because we want to give you that opportunity to provide that. We don't want to just move forward with some missing information from you, because if we do have missing information, we have to go for rebuttal to the claimant and let them review it. And if they dispute anything or say something didn't happen, we want to give you the opportunity, again, to provide information to support your position. And that's why sometimes we volley back and forth, because we'll ask for maybe 5 things and we'll get 1 and not the 4 others. So if we have 1 and not the 4 others, we're going to call you and say, employer, okay, we asked for 5. We have 1 thing that was supplied. Can you still provide these 4 other things? What we're doing is giving you the opportunity to provide the details to support your position before we go to the claimant. Because once we go to the claimant, all they have to do, if we have your information but no supporting documentation, and if they say it didn't happen, then you haven't borne the burden. It's a he said, she said. And we will come back to you again after that one more time, allowing you the opportunity to support your position. But if you don't respond or we don't get the information needed to support the reason for the separation, we'll make a decision based on what we have. And more likely, if it's missing on a discharge, it won't go in more likely in the employer's favor. And then your account will be held chargeable. So we're trying to give you the information or the opportunity to provide the information to support your position.
And there's one more thing I'd like to add to that real quickly. If you can talk to us by phone, talk to our examiners by phone, it makes the process much faster, much easier, and much more accurate. Email back and forth, all of that stuff has to be put into the record. And so cases can get huge. If we call you and you can give us information just over the phone, that typically works better. And we can, you can ask them, hey, why are you asking this, right? And then maybe you'll get a good explanation. So you're not like, why am I wasting my time here? Because we don't want you to waste your time. Okay, show the sides slide again. Hey, Clinton, I'm going to put that up right now. Do you know if they're going to have access to this?
That's a really good question. That's usually something that's left up to like your leadership if you want the information shared or not. But I put it in the.
Yeah, we'd like that to be shared so that.
Yeah, I put it in the chat. So it's in the chat. So there should be a link there. And then I'll also try to add the one for fraud in there as well.
Okay.
Yeah, we can share the slides if you want to.
Okay, next one, Tracy Yeager. Where do we report applicants who do not respond, turn down interviews, job offers? Okay, let me find that slide. Was it before this one? Was it before sides? No, I think it was after. Hold on a second. Let me.
There it is right here.
Okay,
so
there's your fraud report.
The email is the work.refusal@labor.idaho.gov. So you'd want to send us an email with that information and we'll be able to follow up on it.
And real quick, guys, just because we just passed the slide and I want to talk about it again, new hire reports. If you could please fill out new hire reports, that would save so much fraud. Fraud happens on an individual level. Fraud happens on a organizational level where people will make fake businesses and stuff like that. So if you can give us that information, we can stop a lot of fraud. Okay, let's see. Do we need to report when an employee is discharged or only hired? Discharged. So if they're newly hired, report it. Discharge, usually we don't care too much unless they file for unemployment insurance, right? So if they file for unemployment insurance, you're going to get something in the mail that says this person filed for unemployment insurance, and they've been discharged. So we're going to ask you some questions about it. But really, we want you to make sure once you've hired them, let us know. Okay, let me get back to this. Anonymous, my payroll system reports new hires automatically. Does the department get information from Gusto or QuickBooks, for example? Let me.
That I'm not sure.
Yeah, Gusto or QuickBooks. Anonymous attendee who gave this question, if you could please send me that in an email and I can find out, because to be honest, I don't know if our system accepts those or not, but I could find out and let you know. Follow-up, if there is no notification by sides, even if an employer is signed up for sides. So you mean you didn't get a notification of separation on sides if you are signed up? I'm not sure how that would work. If somebody filed a claim, you should always be getting a notification every time. If you're not getting a notification, I'm not really sure. You might want to contact me and I can get in touch with the sides person and find out if there's something wrong with your account, or what the specific situation is that maybe lets you not getting it, because you should be getting it every time. Okay, Christopher Gilliam. If a state employee is medically laid off, where they have 1 year to get well enough to return to their employer, would that be an employer attachment situation, allowing them to get unemployment? Okay, so
I'll get this one.
you guys,
So what we're looking at is, what is the relationship or the status with that employee? Are they on a leave of absence? If they're on a leave of absence, they're actually not unemployed and they're not going to be eligible for unemployment insurance. There has to be a separation that occurs. So if the agreement is, you have a problem, go get well, it's going to take a year and you're coming back, they're actually not unemployed. So they're going to be denied. Now, if they've quit medically, so if they come up and say, well, a year, I can't, I have to go and work, I have to find a job, I can't do this job because of my medical situation. If they sever the relationship because they have to go find something they can do with the limitations, we're going to look at that as a medical quit. And there's a potential for them to be eligible if there's other work out there they can do with limitations they have, and we can justify that. So it depends on the situation. Is there a separation or not?
okay. Sherry Horton, will a copy of your slides be sent to attendees? Thank you.
I'm okay with that.
We're happy if you can do that. Clinton, I don't know if that's something that you can do, if you just shoot the slideshow to everybody. I'm not sure if that's something you're capable of, but we'd be happy with that information. Okay, Christopher Gilliam, when state HR people post jobs, are they automatically entered into Idaho Works? Idaho Works is a different system than we work in. The local offices have their own job stuff. So
It's a program.
yeah, their own program that we don't have access to. But once again, if you want to send that to me, I will contact them and find out, because I honestly don't know the answer to that. How can I prove to the Department of Labor a candidate did not show up for their interview other than my word?
Well, what we're going to do is, if you have, there's ways to prove it. Did you send an email? We can get a copy of that. Did you call the person? We can get a copy of your phone record to support your story that this transaction took place. And so there's ways that you can actually do that. Otherwise, it's going to be hard. The claimant, all they have to do is say, no, it didn't happen. But if we get like a phone record or an email supporting that, even an email may have been sent, it may not have been received. So we're going to look at the whole thing. But if you can give us something to support, you communicate, you try to convey that information to the potential applicant, we're going to follow up on it.
Okay. How should we respond on the paperwork regarding future income if there's a severance agreement involved, but the employee has not signed off on it yet? I would just put something on there like potential severance, something just so that it's opened our eyes to it. Severance, if you're depending on how that severance works, can make it so that claim is not eligible for a while, depending on how, if it's paid out paycheck to paycheck, like as if they're working, that is reportable and they wouldn't be eligible during that time period. So if you just put something in there to hone us in that we have to look at that severance and figure out what's going on, that's all you need to do. Ann Hamilton, if there have been no claims filed in years, what are other reasons the tax rate would increase? So the tax rate can increase if there's a massive downturn in the economy, right? And this is why we try to keep that fund at the right size, because the last thing we want to do is raise taxes in a recession, right? We never want that to happen. That's like the last thing we want to do. So we try to keep that the correct size. But like you guys who've been in business for a while, 2008, 2009, when we had the Great Recession, our fund was gone like in a month. It was just totally used up. So we had to take loans so that we could continue paying people. Well, then we have to pay those loans back. So everybody's rate went up after that because we had to get the money back. It's not what we want to do, it's what we have to do to make sure this program stays solvent. And there are actual federal regulations that we have to. So those are some of the reasons that taxes would go up, other than the experience rating that we discussed. Also, every year they look at the rates and they try to just change them a little bit each year so that there's never going to be a massive raise of taxes on you guys, right? Just a little bits here and there to get it to go. Like I said, it's nice and low right now, and we're hoping it stays that way and we don't have any recessions in the future. Julie Olson, what happens if a business is sold and the new owner hires all employees in the same position with the same hours, and after some time the previous owner account liable for benefits? Okay, so this is a good question. So liable for benefits if the employee was fired. So if there's a business and you buy that business, right, you have the option to actually buy their unemployment insurance rate with it. You have to fill out some special paperwork to do that, and then that rate is now your rate, and anything that's associated with it stays with you. Most of the time, people who buy a business don't take the rate with them. So let's say you bought a business and then you didn't take the rate, you started your own business, so you're at 1%. Remember, we looked at that slide before, 1% is a starting rate. If you laid a bunch of people off, we're looking at the base period. That base period was, right now, we're looking at what, 4 or 5 months ago, right? So none of the wages from your new business at that point are chargeable. It's all going to go onto that old business. So I hope that explains how that would work. Is there a way to see history of sides requests or our responses? That's another one I'm going to have you email me, because I am not the sites coordinator and I'm not sure exactly how to navigate their system to see if we can pull that additional information up. But if you could send it to me, we will find the answer and send it back to you. Would you please go over unemployment coverage for attendance separations? It appears to meet the standards of misconduct when a claimant is willfully not showing up for their shift. You want to grab that? Want me to go for it?
Well, what we're looking at is if a person has an attendance problem, what we're looking at is what did you as the employer do to make that person aware that's not acceptable? Did you allow it to continue to happen without doing something such as separating the employee? We have, what's called condoning. If you the person's always late for work, you tell them stop it. They continue to be late, tell them to stop it. They continue to be late and you don't do anything but tell them stop it. It's not acceptable. And if you don't raise the bar as far as awareness of that warning, that's going to be considered condoning, and more likely they're going to be eligible for benefits. So what you want to do is, if you have that problem going on and you've kind of condoned in the past, you want to draw a line in the sand. You want to do something better. Whether if you've just been talking to them, now give them a written warning and actually say, we've allowed you to get by with it in the past. We're not going to do it anymore, and have them sign it. And then if they have one more problem, you have to discharge that person. That's how you can get rid of the condoning part and have benefits actually be denied. If you don't follow through with the written warning or the escalated warning that you're given, you're still on that pattern of condoning, and more likely you're not going to establish misconduct. Even though that's not acceptable, you're allowing it. So it's not really a problem. It's a problem, but you're not taking it as serious. You have to let them go if they're not abiding by your tenant's requirements.
So just to piggyback on that, the feds would say, why that day, right? You let them be late, 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 and then you pick that day. Why that day? How would that claimant know you've let him be late all these times? So it's not that we think that condoning is, it's not that we don't think people should show up to work. Absolutely, we think they should be there when they're hired, but there is that part of the law and rule that we have to follow. And if the claimant was unaware, then you have to make them aware. So like Louie said, follow it. I gave you a warning. Next time, okay, written warning. You do it again, you're fired. Next time, fire them. And if you do that, they'll be denied every time.
The problem we have is after that final warning, we see employers, because they want to be nice, they want to work with it, they allow it to happen. That's where the problem comes in. And more than likely, every time that person is going to be allowed based on that.
Yep. And our hands are tied. I mean, we might be sitting here going, ugh. I mean, just so you guys understand, there's many times that we have to allow people that we don't think should collect benefits. And there's many times we have to deny people that we think should collect benefits. But in that situation, our hands are tied. If you allow them to continue, we don't have a choice. So if we give you advice, follow your disciplinary path and discharge when you're supposed to, and they'll be denied every time. Okay, I have our handbook on a live Google Doc so that I can change, update policies. Do they have to sign each time I change or add a policy, or just at the start of employment? If you're changing a policy and that's the reason they're being separated, then they need to have signed for that, right? They need to be aware of it. Even
if it's just verbiage and it's not changing anything, not a big problem. But if you're changing something which can affect employment, you have to get them, they need to be aware of that change. So you would need to do, an additional addendum and have them sign off on that they were made aware of it.
Yes. Okay. Recently, I've gotten VOEs asking if the former employee qualifies for unemployment, if they're collecting unemployment. I always write unknown since I don't know if they qualify, since the employer doesn't decide, but they seem unhappy with this response. Is this an appropriate response? Do I need to disclose this? Do you know what a VOE is?
I do not.
I'm sure it's a verification of employment.
Okay. I wonder who they're coming from.
So this would be like a new employer contacting them, verifying employment, it looks like.
I would just continue unknown. You don't have that answer. You can't have that answer until the whole investigation is done. I assume they're asking if they were laid off or something like that, but I would just continue to put unknown, because you really don't know if they'd be eligible for unemployment insurance. Because remember, it's not just whether they're monetarily eligible, they also have to be fully available for work and able to work, and not attending school that's going to affect them. There's a bunch of different parts that have to come into play before we could pay somebody. So I think that would be the answer I'd be giving. Phil Lent. Is there a way employers are able to see the claimant's statement upon filing for unemployment or their appeal, so the employer is able to dispute their claim if needed? When we send out the it's called the 501, and it's the document that says, hey, this claimant's been separated. This is what they told us. It doesn't give you the specifics. It doesn't say exactly what they said. It just says whether they said they were quit or discharged or laid off. If you want that specific information, you're gonna have to contact us because the system doesn't automatically put it on there when it mails it out. So yeah, if you have a question about one of these, call us. We'll take a look. You're an interested party in this, so you can have any information that's in that.
Okay, Justin, if
Yes.
you want to hold on just a moment,
Yeah.
because it does look like we are coming up. And I just want to thank everybody for, attending the webinar today. It's always great information. I've gone through these a few times and I still learn things, as I go through these, and, awesome job to the participants. With your guys' question today, it was awesome to see that out there. And then also with our, our guest speakers today, they did an amazing job, sharing the information with us. Kind of the one takeaway that I take from it is just, documentation, as a former, employer and, person that hired people, documentation was always key. Make sure you have a good handbook, make sure they're kept aware of it. Make sure your policies are, consistent with all employees that are there, and you have good documentation, and you can usually, avoid, issues on the back end. Yeah, that's awesome information as always. The next webinar that we do have coming up, I know Justin talked about a little bit, is going to be on the tax portion of it. That'll be on the 30th of October. And it'll actually be the last one that we'll have for this calendar year, which is always sad because it means, the holiday season's right around the corner. But keep an eye out for those ones. If you do have, any questions, or if you do want to look at the other webinars that we have coming up, you can always go to the Department of Labor website at labor.idaho.gov. There is the calendar of event sections. You can find things that are going on locally at your local office, and then also, things that we're doing department-wide like these. But, definitely appreciate, like I said, everybody coming on today, being great participants. Thanks for being business owners and employers in this great state of Idaho, and thanks to have a great rest of your day.